Hello, good morning. Thanks for joining us today. It is a Saturday morning. You guys are dedicated. I guess we are too, because we're all here on a Saturday morning. I think morning. Well, some of you, it's probably afternoon already. And we're going to talk about trading. So good for all of you. Shows a lot of commitment. We like to do these on occasion on the weekend because we know a lot of people have those dreaded regular day jobs, and sometimes it's difficult to commit some time. And hopefully this is a time you can sneak away into your home office or wherever and shut the door and kind of listen to us for a little while. I promise we won't take your entire weekend. I'm sure you've got a lot of other things to do this weekend. I know, Troy, you've got some things you got to do this weekend. You were just telling me.
Yeah, definitely. Good morning, everybody. It's a sports-filled weekend for me. Little League, soccer. My life is not my own.
Exactly. That's what happens when you have those darn kids.
That's right. They take over.
I know. Well, people probably aren't here to hear about our personal lives, but I'm sure everybody's got some other things planned. But we promise we'll make this, let's call it an hour, well worth your time. And if you are joining us live, I hope you are, not watching this on a recording or a replay, take advantage of that. Be interactive with us, ask us questions as we go. We also have Brian and Will, who decided to wake up with us this morning as well, working in the background, all that good stuff. So we're more than happy to answer those questions as we go along, and that makes it pretty efficient. And then, of course, in the end, we will definitely do a Q&A as well. So every question, I hope, will be answered that you might have. Our topic really today is to talk about trading with a smaller account. And that by and large ends up being the majority of the people that come to NetPicks and the Premier Trader University. We have some people that start with very large accounts, but that's obviously going to be the smaller percentages, typically anyway. Quick introductions. This is Mark Soberman, founded NetPicks back in 1996. And you'll see the staff, and I'll tell you who else is on the line here with us in a moment. If you join me late, which it looks like the group went up about 40%, this is interactive. This is live. Ask questions. Type those in anytime. We've got a team working in the background there. More than happy to answer your questions as we go. You can see the topic today. The main focus is going to be trading with a smaller account. How to grow to a full-time if that's what you want, or a part-time income, and then kind of what the opportunities are there. And this is all based upon our Premier Trader University, which is our high-end curriculum-based program with systems and training and a lot of hand-holding. This is the top level that we offer. We're going to be talking about specific trades. Trades have risk. I don't think that'll surprise you. Just want you guys to know that with winners come losers, and you have to really make sure that you invest with capital that you can afford to put up in risk. Don't ever trade the rent money is kind of the saying, or the mortgage money. Never a good idea for many, many reasons. So we will be talking about results and specific results, so just be aware of that. Small account trading, that's really what this is about today, how to launch a trading business, and we really do consider trading a business. It's just should never be looked at as entertainment, as a game. This isn't binary options, where you're just trying to have fun or going to Vegas. I mean, this is trying to build a true business, just like you would if you opened up your CPA agency, or you bought a franchise, or opened a retail store, whatever the case is. We treat it the same way, and that's why we built the Premier Trader University, to really have a complete program. So it's not just system, and it's got everything, and you'll see that later on as we go along. So we were founded way back in 1996. We've been doing this a really long time with a whole bunch of people, just like all of you from around the world. We have got to be probably the most established, or if not, one or two original providers of trading systems, and it's never changed. We've always focused on individual, active traders. Pretty proud of that. I mean, the fact that we've been around for, in basically our third different decade. And Brian Short in the lower right is also on the line with us today. He's working your questions in the background, so he's in the lower right there. And then the trading team, you're going to hear a lot from Troy Noonan. He's the proud developer of the Trend Jumper. We also have Coach Will on the line helping us with recordings today, and he's kind of the mad scientist behind all the cool programming that you'll see. How we really go to our charts and know exactly where to buy and exactly where to sell. I mean, he's the guy behind that engine. And then the rest of the team here, who are maybe smartly off today on a Saturday. But I want you to know that the whole team all trade. They all trade in the markets. They all were former customers. So I think that's why we've got such a rock solid team, and why we can really do some great things with all of you guys, because we know what you're going through. I mean, I traded yesterday, real time. So I always kind of try to say this and point this out, and it might be obvious, but success starts with one market, one contract, one trade. And I actually kind of ripped this off from Coach Will. So Coach Will, if you're on and you're listening, this is something you had said one time along the way. We were talking about a whole bunch of different markets and doing some training, and you had said something about, you'd really just have to have one market that works for you. And really it comes down to that one market and one contract. From there, if you can make that work, everything else is going to fall into line. And that's why I think a small account trader truly can make it. All of you can succeed if you just get to perhaps the hardest point, which is being able to trade successfully on the smallest scale. Once you can do that, okay, once you can do the things you see on the bullet point here, you can grow a business. You can scale. It doesn't take more work and effort to trade more contracts. It's not that much more work and effort to add another market once you get really fluent at what you're able to do. But you have to get to that point of mastery, and that's why I think it's very difficult for people to do this on their own. I don't know if I've ever met anybody who is truly, from the ground up, done it all on their own without mentoring, training, working with other people. It's just a really difficult thing to do. I guess it's not impossible, but it's probably going to be one of the hardest things to accomplish. So something that we talk about a lot is, what your risk is what you trade. And what I mean by that is, you can see I've got some different levels here on the screen. And if your starting account was 5,000 or 25,000, 5,000, 2,500, or 1,000, I'm kind of showing you a little bit based upon, if you're willing to risk 2% or 3% or 5%, how you work backwards into what you should trade. Most people, when they trade or start trading, they feel that they should trade what the broker allows them to trade. So if they've got $5,000 and the broker says, oh yeah, for day trading margin and futures, we'll let you guys trade, the Russell E-mini, crude oil, heck, some of them, maybe the DAX. Well, just because the broker allows you to trade it doesn't mean that you should. If you have $2,500, and even here in the U.S. where they took away a lot of the leverage, but in Forex they still give us, right, 50 to 1, that means you can control theoretically $125,000, which is actually just over one standard size. So for $2,500, you could control a standard size. But what if you lose 50 pips? And that's not impossible to do. You realize that's a $500 loss on a $2,500 account in one trade. You are willing to risk 20%. It's impossible to ever succeed in trading if you get anywhere close to that type of risk. In fact, the 5% on here is probably kind of crazy as well. I'm just sort of showing you the differences. You really probably need to be no more than 3%. And gosh, if you can get down to 2%, that would be better. And I'm talking to small account people here primarily. If you're one of the people who clicked in on 50,000 or 25,000, you should not risk 2% or 3%. You need to be shooting more for 1%. Because as you grow your account, I want your percentage risk to go down. I realize when you start with a smaller account, in the beginning, you're going to have to put yourself in a more aggressive position in order to be able to grow and scale. It's just one of those limitations. It's hard to build an income if you say, okay, I want 1/2 of 1% risk, and I'm going to start with $1,000. It could happen. Time eventually will work your way, but it could take several years. And that's going to be difficult for most people. They will not have the patience to make it through that, even if mathematically it's doable. So I think that's really important. When I started, I did start with higher risk, 2%, 3%. But I can tell you in my personal trade today, I'm well under 1/2 of 1% on any individual trade when it comes to my active income day trading. And I would never go back to 2%, even though I know if I did, theoretically, my rate of return would be higher. But my drawdown would be a lot higher. And when you're drawing down on a larger account, bigger percentages, it could be very painful. I'm not saying it's not painful if 5,000 is like hard-earned capital on your side, but believe me, as your account gets bigger, you don't want to put yourself in that position. You want to start to really protect capital more than try to, ramp it up. So you'll eventually get to that shift. And anybody who gets to have larger portfolios, they tend to think about risk. And most people with smaller accounts tend to think about how much can I make. I want you guys with the smaller accounts to be smart and from day one be thinking about risk and not how much you can make. Risk, if you focus on that and maximize that and control that in your trading, you guys are going to succeed. If you focus on what is my percentage of return, how much am I going to make every day, how quickly can I double my account, I'm pretty sure you're going to fail. All right, so just think about that. Probably most of you who are not successful, which is probably 80, 90%, you probably have always looked at profit and how much you're making and how much you could make, and we all do that. I mean, believe me, I was guilty of this for 10 years probably. But once I started to look at the dark side, right, which everybody wants to ignore, and look at the risk and embrace it and realize I am going to lose and I'm going to have losing trades and really figure out how to work that into my trade plan, that for me was the time that it all changed. That was kind of the light bulb moment where maybe I turned my trading from gambling and entertainment to a real business. All right, so if you can risk that $100 to $250 max risk, you got to start to think about what markets can you trade, okay? Well, on the day trading side, on futures, where I would say day trading futures is for income. Okay, that's kind of what a lot of you guys are after. You're going to see, I'm sure Troy will show you some Dow E-mini and some heating oil. Those are going to be two potentially good choices. Soybeans could be another good choice. I'm showing you some other markets here that maybe aren't the most popular all the time, except everybody's going to go, oh, the S&P of E-mini, that's the most popular, and you're right. But we say this all the time. It's a more intermediate to advanced market to trade. It has nuances that make it a little bit more difficult to trade. That might surprise you, but believe me, after working on this for 18 years and maybe 10 years with S&P mini traders, it is not the easiest place to start. Now, higher risk, crude oil, Russell E-mini, but probably going to need a little bigger account to get involved in those in order to endure a drawdown. On the Forex side, Euro Yen, probably primarily, and Troy's developing, and he's got some other trade plans on the day trading side. You're going to be focusing on minis. Don't fall into the trap of trading 50 to 1 leverage, or if you're outside the US, 100 to 1 or 200 to 1. It's crazy. You're going to draw down way too much because you're going to lose, no matter how good our plans are and our systems are. Again, you got to keep that risk down. So that's how you'll work backwards from risk to do the number of minis. And you won't end up using anywhere near the amount of capital your broker is willing to give you. Remember that if you're maxing out with them, you'll never make money. Okay, you have to use much less than what your brokers are willing to give you. They don't really care. They know you're going to burn out, right? They know most accounts are going to draw down. For them, they may as well get you to trade as much as they can, and many times as quickly as they can. And that's fine. That's not their job to make you successful. That's our job. Swing trading, 1 to 2 mini pairs, and I think it's really important to do a cross section of pairs. Very difficult to swing trade and only pick one market because they're very, very streaky. You can have huge returns, but if you try to pick over the next 3 months or 6 months or 9 months, the one pair on a swing trading basis that's going to be the best, flip a coin, it's really just too much of a gamble. So you want to be able to trade multiple pairs. That's why you need your positions to get down. And you might even get down to micros so you can trade enough. Options is also a choice on the stock side. You're not going to trade equities at all because the risk, you'll never be able to be in this bracket for risk. But options can definitely work, though it's going to be somewhat limited to a little less volatile markets, because if it's like an Apple, it's going to have a lot of volatility. The options premiums are going to be much higher. Now, if you're in that 50 to 125 trade risk, which you kind of saw when I showed you, that's that 2% or that smaller account, the only real future is probably heating oil, Dow, the soybeans. You're going to be a little bit more limited. That's okay. Forex, again, minis, but now you're going to be getting down potentially into the micro size, especially on the swing trading side. And it's just not going to be possible to do options. You definitely can't do stock, and it's really not going to be possible to do options at this risk. But you still have choices here, both on futures and Forex. If you get down into the smallest account size, you just can't think futures. Even if your broker will let you do it, you'll want to focus on micros, primarily, maybe minis. If you're just trading like one mini pair, day trading the euro yen, you can get in that $20 to $50 trade max risk. Swing trading is going to have to be micros, okay? 3 to 7 micro pairs split up. That's the only way you can do it. But again, even with a very small account, futures not going to be in play, options not going to be in play, but definitely you can still day trade, or you can choose to swing trade. Just realize your positions are going to be much smaller. And yes, you're going to go ahead and have your account, and your broker's going to say, oh no, at your account size, you could trade 5 minis. Don't trade 5 minis, right? Keep that 2%, 3% maximum risk. and that determines position size. That is the way you need to go after this. Now, we've shown this spreadsheet quite a bit in the last couple webinars. I want to show it one more time because I want to keep drumming this home, that you don't have to have a big account to start with. This example is $5,000. You don't have to have huge daily income goals. All right, I'm going to assume $50 a day. That's still probably pretty aggressive, but we can change this around. All right, I'm going to be smart and realistic and say, look, no market can scale to 1,000 contracts at a time. You won't be able to fill properly, so I'm going to cap this at 10 contracts. So 10 Dow E-minis, 10 crude oils, whatever. All right, I'm going to keep my risk to 2%, and I'm going to say I'm not going to risk any more than $100 in that case. Okay, so 2% risk, and I'm going to be patient in taking my money out. I'm going to start to trade for income only when I basically have tripled my account. All right, then I'm going to allow myself to start taking money out of my account. All right, so but not until then. Okay, and the maximum that I'm going to take out is 10,000. The reason I'm doing this is because I want to make sure that I can build up my account. I don't want to immediately start trading for income. If you came to our hangout yesterday, we talked about this. That's why you see here that for the first several months of my trade plan, I didn't take any money out, because the most important thing ever for your trading is getting from one contract to two, and then 2 to 3, and 3 to 4, and 4 to 5, which on this case, because of the math, we actually don't get to. And that has to do with the income we're taking out. So if we were to bump up where we were willing to take out the income, it'll allow us to get out at that level, or to start to ramp up the contracts. And you start to see on the right-hand side how much we took out over the 5-year period, 234,000. We've left our account at just 29,000, okay, meaning we took out most of the money, because I said the maximum number that I need is 10 contracts. I could change that to 5. I can put that at 15. I can make different assumptions here. What if I started with 7,500? Well, it's not going to surprise you. That will make more income, right? That our profit over time will be higher. But it's not as dramatically higher as you think. The reason is because I'm capping myself at a realistic number of contracts. I mean, yes, I could risk more per trade up front, and sure, that would get me a much larger bottom line, okay, and a lot more profit, but that probably would not be wise as we started to get to multiple contracts to keep it at 3%. The drawdowns would just probably end up being too painful. So you eventually would want to get down to like 1% risk type of thing. But in the start, if it's at 2% and you're willing to be patient, if you too quickly try to take your money out, you can see here that you're never going to be able to amp up your contracts. You're always going to be stuck at 1 because you're, in a way, being a little too greedy, right? And you're not letting that portfolio grow. I said this many times. The first 6 months that's going to make you or break you. If you can be patient for 6 months, not take the money out, let the money grow, you can be very, very successful. Especially those of you with a small account, focus on the risk, all right, and focus on the patience, and that truly is the magic formula to succeeding in this type of trading. The reason I focused earlier on drawdown, and a lot of you said, oh, I'd be willing to take a 30%, 40%, or 50% drawdown. I want to remind you, if you have a 50% drawdown, in order to get back to break even, you need to gain 100%. Well, if you thought 50% a month was reasonable, maybe you think that's not a big deal. But it's not reasonable. You'll never be able to do that on any kind of regular basis other than getting lucky in a given week or a given month. So that's why you really need to avoid, like the plague, that size drawdown. I believe maybe 20% is kind of the line in the sand. I suppose 25 is okay. A 33% drawdown on, and recovery on active trading, it's definitely very doable. You start to get above that, and the math really starts to work against you. So we really want to control the drawdown, even if it takes us longer to get to that part-time or full-time income. You're going to be so much better off because, like I mentioned, in order to scale, in order to grow, all right, once you accomplish this, like Will says, on one market, one contract, it's very easy to double and triple your business. There's no other business in the world except trading where you can double or triple a business by moving your finger over a little bit on a keyboard. I don't care what business you guys are in now. Most of you have other sources of income. Think about what it would take to double or triple your income right now. Some of you would say it's impossible based upon your situation. You're a professor. You're a doctor. You only have so much time in a day. You're a CPA. You work in a store. You can't work 40 hours a day, right? But in trading, you can work no additional time, double or triple your business, but you can't do it until you get through these initial benchmarks that we're talking about. A big thing that we're going to talk about, and Troy's going to talk about this a little bit, is power of quitting, trading in the prime times, spending the least amount of time possible. People always think, oh, if you trade full-time, that means that you need to trade full-time hours. And that's the last thing you want to do. The good news is when you trade successfully, a lot of times the least amount of time to trade is the best amount of time to trade. Now, I'm going to steal a little bit of Troy's thunder, but this is a quick formula here. We're going to go very quickly, maybe take some quick notes or think about this because I want to get to my charts. Troy's got charts. But his small account formula, aim for 2% risk on average per trade, okay? Like we've talked about, that's a very smart number to start with. The success guide needs to be followed. So he publishes this. It's in our training. People rave about it. This is the thing that's going to really turn it from entertainment and gambling to a true trading business. You got to commit to a trade plan. Like you're going to trade this market, the Dow E-mini. You're going to follow that trade plan. You're going to execute it without question. If you start to veer off from that, you will fail. So I guess if you can hear that in your head that, I'm going to be that guy on your shoulder saying, if you break from the trade plan, you will fail. You don't want to be a failure. Don't break from the trade plan and be patient. We're showing you it takes a little bit of patience in the beginning to ramp up. If you can get through the breakthrough, those first 6 months, your world will change. Your world will truly change. Too many people are impatient and trying to do it too quickly. There is some luck starting out. Like Troy says, you could be incredibly hot in the first week or two. The trend jumper can rattle off 10 winners in a row sometimes. Just realize that you need to think about this like, I'm going to take 2 steps forward and 1 step back, and 2 steps forward and 1 step back, and sometimes 2 steps back. So don't get too taken in if you have success early on, because the odds are you will. Our percentages are that good. Unfortunately, when that happens to people, they start to break all the rules. They're like, oh, Mark doesn't know what he's talking about. This thing's going to get me rich a hell of a lot quicker than he said. And that's when things start to fizzle. So it's really, really important that you stick to what we lay out in the training. And the reason is, look, the money that you potentially can make is extremely exciting. Don't focus, though, necessarily on that profit dollar, right? This is the fun stuff. This is why we do it. This is the reward. But understand there's risk with each one of these. And these are based on 2 contracts, too. So realize you're going to start with 1 contract. But I'm just trying to show you the profit potential, the profitable sessions. It's waiting for you if you just let yourself get there. Kind of give yourself permission to make it. Change what you've been doing up to this point. Let me show you something on a chart. This is the Russell E-mini, and I'm going to hand it off to Troy here. This is a trade plan using the Trend Jumper Pro. This is all mechanical, what you're seeing on the chart here, and I'm going to show you a few things. So I'm going to bring up, this is over 120 trading sessions, okay? So 120 trading sessions divided by 5 is what on the math? That's about 24 weeks. So, we're definitely over a decent amount of time here. Or if we're talking months, probably about 6 months, give or take. So a couple things. This is trading 1 contract, no scaling, okay? No increasing your position size. All right, so if you just never increase your position size, this is showing you 13,900 before commissions, okay? So you are going to have commissions. Now, it's not an overwhelming number of trades. If you paid $4 a trade, that's 155 times 4. It's, $600 in commissions. You're going to have a little bit of slippage. If you slipped, let's say, a tick on every single trade, which in this market you shouldn't, that's going to draw down another $1,550. You're still going to be left with quite a bit of your profit overall. So people tend to focus on this number, right? Oh my God, that's incredible. I start with 5,000 or 6,000 or 7,000, and that's great. But we're going to get you to focus on some different numbers. Number one is, what is your average dollars per trade? Well, that's actually quite solid. That's all winners and losers before commission and slip. But even if I take out $15 for commission and slip, it means every time I trade, I'm averaging about, $74, which is extremely solid. However, go further down and realize there is drawdown. So the max drawdown trading this way intraday before we close was $1,500. The max close drawdown was $1,000. So if you had $5,000 and your max drawdown in this period was $1,450, that's about a 30% drawdown, right? That may be too much to bear. It might tell you that $5,000 to trade this way is not quite enough yet, quite enough to be comfortable. Now, I realize on a closing basis, it was only about a 20% drawdown. The other thing you need to look at is there are times where you will draw down. These are the drawdowns. It's real easy to focus on this. Where it gets challenging is you may start on this day, and this might be the first thing that happens. How would you feel to go from 59.60 to 49.30, draw down $1,000 on your first series of 7 trades with us? But it could happen. I mean, that's why, again, we're focusing so hard on the risk side of the equation. Look at a couple of things that I want to show you. This is Power of Quitting 1, 13,900. With this Trade Assist application, I can say, what if I went for more winners? Power of Quitting 2. If you don't understand that concept, don't worry about it. We'll teach it. Because everybody's like, well, just trade more. You'll make more. So this is Power of Quitting 2, and you're right. My profit went up to 15,960. But look at a few things. My number of trades went from 155 to 247. Okay? Look at my average trade. It went down to $64. Look at my drawdown. It went up to 1,800, or on a closing basis, 1,400. So yeah, Power of Quitting 2 looks like it made me more money, and who doesn't want to make $2,000 more over this period? But by trading harder and longer and making more effort, I know I bottom line more, but it was a hell of a bad way to do it. Because everything went down, all of the important stats went down, and I guarantee you, it looks good here, but you had a long stretch of time where you weren't even hitting new equity highs. So this is not the way to do it. The way to do it is to build that account and trade 2 contracts and do Power of Quitting 1. You're going to be so much better off. Wouldn't even know how to stress that overall. So it's really important. Now, one final thing we really can't get into today is we kind of do other things, like we talk about training, and I'm going to talk about that later. And one of those things is called key levels and doing key level adjustments. So I'm actually going to turn off the key levels on here if I can ever find it, and just show you a little bit of a difference when we turn off the key levels, and why sometimes it's important to semi-automate things and not be totally automated on your approach. Okay, so let me go ahead, go down to one contract, or sorry, Power of Quitting 1, that's what I meant to say. Okay, so without key level adjustments, and you'll learn that in our trading, and hopefully you'll remember some of the numbers we looked at just a bit ago. Once this is coming up, it's kind of thinking about it, I'll show you what I mean. We do make less when we approach this strictly mechanical. And a lot of what we try to teach you guys is how to take really good mechanical setups, but use things that you learn in the university to improve your bottom line. So, it drops down to 12.2, so we had about a 15% bump when we just literally work around certain numbers. And we get very mechanical with it, but it dramatically dropped our drawdown. Remember, our drawdown was only about $1,000 just by using key levels. So the profit went down, but more importantly, the drawdown here went way up. So keep that in mind. So Troy, let me hand it off to you and show us what you got.
Great, Mark. Yeah, that's a fantastic example. I like to just think of it as the 5% art to trading. We used to say 10%, but now we've got the tools that we use actually making some of those artsy types of decisions. They've become mechanical too, because Mark just showed you how he could turn it on or off. But those were things that we've just learned over time, just getting around a 5 or a 0 with your entries and stops. Look at the dramatic difference that Mark just showed you with the Russell. It's amazing how that works on so many different markets. So I think what I'll do, I've got a lot of examples here. There's no way I'm going to get through them all. Let me just go through a really quick explanation of what the trend jumper is and how it works for those of you who haven't seen it yet. And then I'm going to start showing you what you can trade and how you can trade it to build a small account into an account that's no longer small. I mean, that's the goal, right? So let's start with this example right here. This just happened yesterday. We were already done actually with heating oil, but this is a really clear example of how the strategy works. The first thing I want to show you is this green dotted line. Okay, the green dotted line, that's the secret sauce behind the trend jumper. It's called the jump line, and it gives you just this amazing wealth of information right at a glance. One of the most important things it tells you is the direction that the market is most likely to go. So it tells you momentum. So when you have a setup like this and you see these symbols above the bar, you have a little plus sign, you have some dots up here, that means you're going to go long. So right away it solves a lot of issues, right? Because knowing when to go long and when to go short, I mean, that's a huge percentage of the battle. And right away you know. So you're going to go long. You click on the bar, and you instantly see the entire trade. You got your stop, your entries, some targets. We're going to that second target with one position. As your account grows, you would add a second position so that you could take advantage yet again of the green dotted line and use that as a trailing stop marker. Okay? So basically you see this, you place your order. Now when we get to that first target, that's when we're going to try to, we're going to move our stop and lock in a tick of profit and get to a risk-free position. So the trend jumper aggressively tries to put you at a risk-free position. Okay, that's just part of the deal. So the more trades you have where you're in a risk-free position, the better off you are. That's one of the philosophies of the strategy. All right, so obviously you could see how hit the first target and the stop moved from here to here, and it even, we lock in a tick so that we can cover some of the costs of commission and slippage. All right, and then you can see that it hit the full target. So if you're trading a single position, you're done, one and done. Of course, you have to know when to trade and what trades to take, and that's all explained in the trade plans. Each trade plan is very specific. What I want to show you, though, is something else that's built in the trend jumper, and that is this very favorable risk-reward ratio. Just imagine the space between those two lines. It doesn't matter what market you're trading, because it's going to be different with each market, but the space between those two lines, that's how much you're risking, right? That's your risk. Sometimes it helps just to see things in a visual way. Look at the space between our entry and our target. Look how much larger it is. So the trend jumper basically is designed, in most cases, to give you this really favorable risk-reward ratio. And that's important because if you start off with a losing trade, which is very common, I mean, that's just trading, it's nice to know that you can come back really strong and really quickly because you have that favorable risk-reward ratio on your side. Okay, and that's, again, you cannot be afraid of losing trades. If you're trading to make money and to grow your account, you have to focus on the edge that your trade plan gives you over time. And that includes wins, losses, losses, wins, wins, right? It's just this random distribution of wins and losses. As soon as you try to divorce the losses from the winners, you end up getting the losses and missing the winners. It's funny how that works, but that's how trading is. So you have to rely more on the trade plan, and you learn to lean on it. It takes the pressure off of you. Look what happens when the trailer kicks in. All of a sudden your risk-reward ratio is improved dramatically. So that's why we like to use the trailer. The trend jumper is very accurate with its targets, but when it overshoots the target, we want to have the chance to stay in and catch those bigger moves. So that's basically how the trend jumper works. If you think about it, the whole adage of plan your trade and trade your plan, it's built into every single trade. Every single trade is a self-contained, complete trade plan. Gives you everything, entries, targets, stops, and even the rules to manage the trade until it's finished. And then that fits into the trade plan that's a little bigger, right? That tells you when to start, when to stop. All right, so I think what I'll do is I'll show you a quick Forex example. Swing trading, this is a completely different animal, right? But a lot of you are struggling with an account that you cannot necessarily trade futures because you just don't have enough to control a futures contract. This could be a trader that only has $1,000 or $2,000, $3,000 maybe. So then you got to ask yourself, are you going to day trade Forex? Maybe you have a job. That's maybe why you're here on a Saturday, right? So if you can't day trade, you're left with the option of swing trading. And for me, the best way to swing trade is with the end of day charts, daily charts, because you could do it when you get home at the end of the day. You can spend 15 minutes a day, follow, maybe a dozen pairs. You build it up to that, steadily. We show you how to kind of incrementally build up a portfolio of pairs. And 15 minutes a day, you can manage these trades that produce thousands of pips of profit over time. Okay, so let's just look at this little cluster here on the right. This is the pound Aussie. This one pair has made literally, I would guesstimate 12 to 13,000 pips of profit since the beginning of 2012. So 2 years, now we're in 2014. You could see that it's winning here on the right edge. How do you know what trade to take? There's a trade plan that explains how you manage all these trades, okay? The thing I want to show you is with Forex, you have the ability to scale out at each one of these positions. And that's a pretty cool thing, because from the entry to target one, you have pretty close to a 1-to-1 risk-reward ratio. It's pretty close to 1.5 to 1 here, pretty close to 2 to 1 here, and then you could trail. I like to add on and actually scale in. So when I trade this kind of method, I'm going with a much smaller risk. I'm going with about 0.75%, because I'm going to be, building a position. And the reason why I like to do that, because a few times a year you get these monster moves, and you want to be able to take advantage of all these great setups. Okay, and you can even go further back, and you can see that these monster moves happen 1, 2, maybe 3 times a year. This is many thousands of pips, guys. And if you're spending 15 minutes a day and you're putting on the small risk and treating these trades the way it's taught in the training, you can remember each trade is a self-contained trade plan. So you could trade each one individually. They all have different parameters because it's self-tuning to market conditions at the right edge of the chart when it's happening live. I mean, if you think about it, when you're right here, you have no idea what's going to happen next, right? In fact, that trade looks like a really big trade, and it is. That's over 1,000 pips of profit. So you got to go in with small risk, because what if you lose 2 or 3 of these in a row? And believe me, for sure, that happens in trading. You have to arm yourself and be prepared for that by putting on proper risk. And then you just lean on the strategy and rest assured that the strategy makes money as a business over time, as long as you keep showing up to run your business. Again, you don't know when this is going to happen, but it is going to happen. And as long as you're trading the strategy and you're keeping that risk small, you can grab this. Now, look, 68, this is kind of counting up some pips here. There's over $13,000, or I'm sorry, 13,000 pips of profit in this little run-up, right? And we're talking, I don't know, 2 months worth of trading at 15 minutes a day. And you keep going and you still get some really big, I mean, I can go through these examples and you just see how accurate these targets are, even though they're clustered inside of each other. Each trade is self-tuned at that moment. Okay, so that's the trend jumper in a nutshell. I kind of taught you like 85% of the strategy. What I want to do next is I want to now start demonstrating to you how you can trade with a small account, these exact same trade plans. And there was a question about day trading with Forex with a small account using MT4 or TradeStation or Ninja Trader. Doesn't really matter. But what I want to do is show you a tool that I like to use. Mark showed you that amazing capital growth spreadsheet. There's another tool that I use and that many members in our of the Trend Jumper and the PTU use called the UTA, the Ultimate Trade Analyzer. And it's this supercharged trade log. And it teaches you, you learn about the trees from the forest, basically. You got every trade is a tree in the forest, but it's the equity curve that is the actual forest. And so let's look up here for a moment. This is a pretty cool tool. What we're going to do is we're going to pretend that we have $2,000 to start with, okay? Very modest. And so we have to trade micro lots, 10 cents a pip. That's it, okay? So these are all the trades dating back to the beginning of 2013. And we're going to trade 3 positions, target 2, target 3, and a trailer. And we're going to put on 2% risk, so 0.66% per position, okay? 3 positions per trade. And this plan risks $1.64 per position. So you have to multiply that by 3, okay? But this is looking at each position as a single trade. Anyway, don't worry about that. The point is that how much do you think you can grow your account taking the exact same trades from the beginning of 2013 up until the end of yesterday, for example? How much do you think you grow your account? Write it down on a piece of paper. Now, let me show you something that's pretty interesting. If you just traded a single micro lot starting with $2,000 and never used money management, never grew your account based on that 2% formula, you would have turned $2,000 into nearly $2,900. That's pretty good, right? That's a pretty large percentage growth over, less than a year and a half, a year and 3 months or whatever. So, I mean, Wall Street careers are built on 10% a year, basically, right? This is way more than that. So imagine, though, if you stuck to the formula, look what you would have turned that $2,000 account into. Is this why we're trading, guys? This is making money, right? This is why we're trading. Did we take losses in there? Yeah. And if you would have quit after all those losses here and there, you would have never been able to achieve this. So you have to ask yourself, is it worth trading through some losses if it means at the end of the road you're going to have this huge growth and run up in your account? I mean, that's why we're trading, isn't it? Look at how it grew the position size up to 251 micro lots. I mean, that's 2.51 full-size lots in what, 15 months? It's pretty amazing. This is another interesting number. Notice how the percentage of drawdown was nearly 79%. 79% of the time, you're in drawdown. Does that sound like a lot to you? Think about it. To me, it's an amazing number, because what that tells me is that about 21% of the time, 21%, think of 21 out of 100 trades, or 2 trades out of 10 on average, is hitting new equity highs. Could you trade a trade plan where on average every 2 out of 10 trades you're going to make a new record equity high despite wins and losses and the random distribution of wins and losses? You see how powerful that is? The other thing you want to think about is the whole idea of when you're starting up as a trade business, don't businesses take time to ramp up? They do, don't they? Look over here on the right edge, right here. This is a histogram that illustrates putting on, adding and subtracting contract sizes as your account grows. Remember, we were starting with 10 cents a contract, right? 10 cents per lot, micro lot. Look at how the ramp takes effect. The contract size is growing, shrinking, growing, shrinking, growing, shrinking. Every time it grows, it takes a step up higher, higher, and this actually reflects the pattern of the growing equity curve. But this is how many micro lots are going on and off as your account grows. This is what I mean by ramping up your business. You have to give yourself time. But where the real money is made is near the end, because you start hitting a curve that angles upwards. See that? So you have to be super patient. Most of the growth occurred, if you look at it on a percentage basis, in just the last few months. Okay? So, keep that in mind. Here's another way to look at it. Trading just one micro lot, you can see on the left, the blue line, it went from $2,000. It ramped up little by little, slowly but surely. But when you traded the multiple positions using the formula, over here on the right, the green line, you can see how the ramp moved, but look at where the real growth happened, right near the end there, right? And what do you think is going to happen then over the next 6 months? That curve's going to go up and up until we hit that cap of maximum lots that we're going to allow this position to actually trade, this trade plan to trade. Pretty remarkable, isn't it? Let me give you a few more quick examples here. Let's look at the Dow Mini. So with the Dow Mini, this is a pretty amazing example too, because the Dow Mini makes a very modest, maybe $30 net per trade with 2 positions. Doesn't seem like a lot, but you subtract out some trade costs. If you start with just $10,000 and you put 1.5% risk on each position, you have to be a little more aggressive with the small account. Ultimately, that's a 3% risk. We're going to allow it to trade up to 10 contracts maximum per position. That's still 20 contracts on 2 positions, right? If you just took 10,000 and only traded 1 contract through all the trades from last November of 2012 up until yesterday, you would have grown 10,000 into, basically you've more than doubled your money. I mean, that's nearly 100% return in a year All right, so you're already 10 times better than the average professional on Wall Street. Well, look what happens when you start putting on the fixed fractional money management of 3% based on your account size. Look at how you've turned $10,000 into $92,000. That's starting with a $10,000 account. So if you only have $5,000, you just trade a single position, and you just cut these numbers in half, basically. But look at this. The drawdown, you're in drawdown about 90% of the time. 90%. But think about it. You can't make a new record profit level on every trade. If you did, well, trading would be illegal, and you'd be breaking rocks in Leavenworth. No one's going to let you do that. So you think that's a big number, but what this tells me is that 1 out of 10 trades over the last 2.5 years, 1 out of 10 on average is making a new record profit level. Think about it. Can you do that? There's wins and losses, losses, wins, as we know. Again, you look at the ramping up. It's pretty dramatic. This one actually hits its cap. We put a 10 contract cap. It hit the cap a little more than halfway through. It actually hit it and came down a little. Look, this is drawdown. You had to take position sizes off, but it ramped back up again. What do you think your risk is when you finally get to here? Notice that the contracts aren't going up, but your account keeps growing. So now your risk per trade is going down, 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 down as your account grows, and you've capped out at your maximum 10 contracts. Do you think you could put on a 20 contract trade if it's only 0.1% risk to your capital? Would you be able to be comfortable with that? It's all relative, right? You have to give yourself time to grow your business. So let's see. I want to show you one more because this is pretty cool, and that's the soybeans example. I want to show you the difference a 0.25% can make, just a 0.25%. So on soybeans, and I'll talk to you about the average losses on some of these. But again, starting with $10,000, risking 1.75%, right? So 3.5% per trade, and this is just going back to September 9th because that's how long I've been tracking it. A single position grew from 10,000 to 18,000 in less than a year, right? That's annualize that. It's pretty amazing. But look what it grew to with the 1.75% per position. 10,000 to 28,000. It's gone up to 5 contracts. It's hitting new equity highs, almost every 2 out of 10 trades on average. It's remarkable. Now, what happens if we bump this up to 2% per trade? It's a 4% risk, which is very aggressive. Can I make the case to be that aggressive with soybeans? I think I can, and the reason why is because it's winning 71% of the time. It has a 71% winning record. So if you have a high winning percentage, maybe you can make the case to risk a little bit more. You don't have to. Maybe you can. Look at what the 0.25% difference in risk did. It went up to $39,000, up to 8 contracts, just a 0.25%. And this illustrates how powerful your risk allotment is to the overall growth or decline of your account. Notice that we're not putting in crazy numbers in here. With Forex, they're going to let you do 50-to-1 leverage. Don't ever do that. You want to keep the risk small. Think like a business person. Give your business a chance to ramp up. Look how long the ramp is going here on the front end before it actually starts going up. This is many months of trading. I've only been tracking this since last September. We saw some amazing growth, but imagine what this is going to be by next year. Imagine what it's going to be 3 years down the road. If we're trading as a business and trading to be professional and to be successful, we have to think about best practices, we have to think about being sensible, and we have to think about minding our shop so that we can open our doors tomorrow and to continue to remain in business. That's how we grow a small account into a huge account. Now, I just showed you a $2,000 account, See, here's your 71.5% of all these trades, right? And there's winners and losers and losers and winners and blah, blah, blah. But the end result is what we're after. And the end result is what I call the forest. That's this, right? That's the forest. This is where you have to live as a trader. You cannot be living inside of each one of these trades here, fretting the outcome of each trade, and then all of a sudden you're interjecting your personality and you're being a human being and you're making all the bad decisions. All of a sudden your trading plan's out the window and who knows what the heck you're trading. You're never going to get these results. You have to elevate beyond that and actually stop being a human being and be a trader and run your trading business. So that's pretty much my demonstration, Mark. We could look at more examples later if you'd like. I did want to show you some stocks. So in the Q&A, if that comes up, we could always go back to the charts.
Cool. No, that's awesome, Troy. I mean, it's so powerful. I mean, I hope some people look at that and, just it should be semi-blown away, because even for me, it's always amazing to look at. And I've been trading a long time, and I always, sometimes you need the reminder, because you're right, you do get too caught up in the individual trade. You get too caught up in the success today. You don't realize the much grander, the much bigger picture. And I hope that everybody is kind of seeing that, despite your account size, where you may think that it's a disadvantage and it's a penalty, and you just wish you had more money to start with, that you can see with some hard work and some patience and a great training and a great system, the path is there for every single person listening here today. And what we've done with the Premier Trader University is we feel that we've developed the perfect program to kind of take you from seeing all this potential, but how do you actually make this happen for yourself and make this happen in your account and go to a part-time to full-time income. So the whole idea behind developing the Premier Trader University was to ensure that we had great systems, great software, great training, and a lot of ongoing support and what I kind of call hand-holding. And I really think that's the easiest and the best and the smartest way to be successful. The success ratio in a university-type curriculum is always going to be much higher, much higher than expecting somebody to do it on their own. And the way that we do it is we try to break it down into kind of 3 easy phases. The first phase is what we call the prerequisites. And the prerequisites are just where you do the home study at your own pace. And the reason we have prereq is just like going to college. You kind of like to feel that everybody in the class is on somewhat equal footing. So the idea is when you enroll in the university, you go through the prerequisite course, which is amazing. We've had rave reviews about it. But it gets everybody on the same page. So when we start the live in the market training, the terminology and our approach, everybody's have different experience levels, but we're all going to be on a good level. And we've done this since 2012. And it really has made a huge difference once we go to the live. We don't have a lot of confusion early on. And you learn a whole bunch of things which you're seeing. And this is just a few of the bullet points from, charting platforms to technical analysis, meaning, you can have a bookshelf of books on tech analysis. We're going to just focus on what works in trading for real and not all kinds of theory. Risk management, trade psychology, developing a trade plan, using our trade plans. I mean, these are really, really important, picking the right markets. So the prereq is really an amazing way to start right away. It's self-paced, and it all leads up to the undergraduate portion of our training. And we kind of call this day one, basically. And this is where we teach you the core trend jumper strategy that Troy showed you that hopefully you're very excited about. I know some of you here already have the trend jumper core. You guys love it, and that's great. And this is one part of what we do in the university, because unless you guys have a trading system and trade plans that will work in the market, anything else we teach you is kind of for naught, right? You've got to have a great system now, no matter how good your understanding is of risk and everything else. So we will teach you, and I think this is the best way to learn the trend jumper rather than trying to do it on your own. We'll teach you in a live class the trend jumper. And it's going to be everything from the software, the indicators, the programming, everything you need to know, step-by-step trade plans. You're going to get all of that. But rather than just kind of giving it to you on video, we're going to teach it live. And it's really a great way to learn and master the trend jumper. In addition, some huge extras that people don't get when they come in to the trend jumper, what we call standalone, is we offer with the university, because again, this is a much deeper, much closer bond, much more hand-holding. You get unlimited live training classes, so we don't charge monthly. We also give VIP level, which means it's 4 days a week rather than 2. All the trade plans that ever come out, everything on the Owners Club. So it's day one is fantastic, but the ongoing is what truly, I think, makes a big difference overall. And we teach it just so you don't worry about it. You don't have to come to us. You can absolutely learn in the comfort of your home office, just like you are now, in a fully interactive webinar. So you'll see all the other students. We all communicate back and forth. The staff is on there. It's really an amazing way to learn and master the Trend Power system. So then we kind of move on to what we sort of call day 2. And this is the graduate level. And how quickly can you get, or how often can you get to a graduate level training in by the second day? But that's the neat thing about us. We've been doing this for 17 years. We kind of throw away all the garbage and things you don't need, and we focus on what it takes to successfully trade. So once you start to master the core concepts in the Trend Jumper, you want to feel like, hey, I can take this and grow. I can take this and get more advanced. I think that's important. So the graduate level takes us into a deeper dive into the Trend Jumper. You need to understand the strategy even more so. Troy talked about the art of trading. A lot of the art gets taught in the graduate. A lot of mechanical, in the undergraduate in day 1. A lot of the art stuff starts to come into play on day 2. And I'm going to show you why that's so important, how much this art of trading can add to your bottom line in a little bit. Hard numbers. It's fairly amazing overall what this day 2 can do for you. We also start to introduce some additional trade opportunities, some additional filtering, things that will improve your win-loss. Like Troy showed you how much a quarter point change here and there can make in your bottom line. Well, if you can add a few percentage points to your winning percentage, it is unbelievable over time, with some patience, what will happen to your bottom line. And that is what day 2 is all about. It's taking those mechanical, that approach that can make you successful, but let's start to quicken the pace. Let's start to improve the way we use our capital and get to our goals that much quicker. And one of the ways that we do it is we introduce for the first time in day 2 our pro level calculator. Now, it's not a calculator you buy at Office Depot. This is amazing software that you put onto your chart that literally takes a lot of the art of trading and in many ways turns it into a mechanical. And I showed you earlier what this key level, whether you know what that means or not, can do to the bottom line. It's pretty amazing. The pro level calculator starts to do things that we always in the past had to manage in our minds on paper. It now actually happens on the chart. So your responsibility just turns into being an efficient executor of the trade plan. It will make you a much better trader. Your errors will go down to nothing, and you'll be that much more accurate. It makes a huge difference. So that is day 2. In addition, I showed you a little peek at what I call Trade Assist. And with that tool, you can semi-automate your trading. You could theoretically automate it as well. We're bigger believers in semi-automation, and I'm going to talk a lot about that personally during this day 2, and you're going to hear about that, or maybe a little bit even in day 1. But this is a way we can very quickly, rather than spending hundreds of hours, I can change a couple inputs and get an answer. And that's also the tools that we use to help us develop the amazing trade plans for all of you. So you guys will get access to this. You'll get training on it. You'll know how to do it. You can deploy it. Ultimately, long term, you don't have to use it if you just feel like you don't. But people end up loving it. You can get all kinds of amazing numbers, data, etc. And you can take our trade plans and even for some people refine them even further. So then you move on to day 3, and day 3 becomes things that nobody has ever seen with the Premier Trader University and the Trend Jumper. I mean, this is brand new, never before introduced, and this is where it gets really neat. So as you can imagine, we've been doing the Trend Jumper, we're going to be coming up on 2 years. We have learned an awful lot about its capabilities. It's doing things that maybe we didn't even think were possible when we first started. So Troy and Will have been working for months and basically taking a lot of these new concepts and new ideas and programming all of this, and this toolkit will provide the new software along with all the training to do things that we were never able to do. What I'm really trying to stress for you here is when you're first starting out with a small account and you're first starting to build up, that's great. But you want to think and you want to know and you want to be confident that this can grow with you, that the Trend Jumper is going to grow as your account size grows, as you get more savvy of a trader, right? You don't want something that you're going to cap out with and then be back to square one. You're going to never really be back to square one because you can just see how many potential things you can do as you progress from the day 1 knowledge to the day 2 knowledge to the day 3 knowledge. It'll take you a little bit of time to put all of that to work and all of that to use, but it should be a very exciting and motivating thing to know that if I can get these core basics down and I can be patient at the beginning like these guys have showed me, and if I can understand my risk, look at how much is waiting for me. It's really, truly incredible. Another thing that we're going to do in the 3-day training is we're going to start and we're going to introduce you to our PTU funded trader trading program. And this is super exciting because if you have a smaller account, one thing you might be thinking is, if I get really good at this, it's going to take me a long time to build my account, and that's arguably true. What if I told you if you will put in the work and effort and you become good at this and you master the trend jumper and the PTU strategies and you can prove that you can be successful, that we can get you staked with capital that you probably never thought would be possible or might take you several years to build up on your own, and you can keep the majority of the profit. So we're going to introduce you to the roadmap on how to use the funded trader training program. We can't do this any other way except in the university because we know that the university students are going to be the best trained, the highest degree of success. You guys are going to be the ones that are going to be able to meet the criteria that is going to satisfy the investors. All right, and once that happens, believe me, the people line up to give capital, right? But you have to be able to accomplish some very specific things. Well, I'm here to tell you that with the trend jumper, it qualifies. Okay, if you can follow it and do it, you will be able to participate in this program if that's what you choose. And in particular, I would think for small account people, that has got to be extremely exciting. What I told you before about training and key level and chart levels, and Troy was talking about art, look at the yellow, the right. That is integrating training over the mechanical. Sometimes it's a small difference, sometimes it's a huge difference in the bottom line. So no additional effort in these sample sizes, but a fairly significant percentage bump. So that's why day 2 and day 3 become so critical, because what you learn during those days and what you start to implement will make an awfully big improvement to your bottom line. So that's why you want to become a smart, savvy trader. Okay, you don't want to be strictly mechanical in everything you do because the reward is there. The people who get really good at this will do that much better. And we've already shown you how much a few percentage points can make over time to your bottom line. So the training is great, and definitely implementing that makes a huge difference. We've got rave reviews. If you guys came early, you saw just dozens and dozens of testimonials. We've had a lot of people since 2012 go through the university. We kind of rarely do it these days because it's a big effort for us to put this program together, as you can imagine. It's a big commitment ongoing. But we've really had great success with the classes. And the way that it's going to work, when you enroll today, you should start doing the prerequisite. You don't have to start this weekend, but maybe Monday, Tuesday. Start to go through it. And then those 3 days that I described to you will happen starting April 1, 2, 3. Well, today is March 22nd, so this is amazing timing. You've got plenty of time to get through the prereq, and literally, in less than 2 weeks, you're going to be going through the undergraduate, the graduate, and the master's. I want to do a second thing. We've never done this before. If you want to join us live when we're teaching in Los Angeles in the classroom, join us live. No additional charge, nothing else. 1, take a vacation. 2, maybe you're in that region already, and we'd be happy to teach you that way. Some people feel like if they're in a classroom, it kind of forces them to really focus and learn the best and really immerse it, and then, of course, you get to meet everybody as well. That you don't have to do that. You can be comfortable in your home or office as well and avoid the airport and the travel, but we never made this available, so I wanted to let you know that you also can join us live and in person. Regardless whether you join us virtually or live, it's happening and it's coming up pretty soon, which is exciting. So these are all the things you're going to get. Don't panic about the pricing. This is truly what I think it's worth, and I feel sometimes it's understated. And the reason I came up with a lot of these prices is I looked at other universities and academies, and I saw what they're charging, and most of them are $10,000 to $25,000. By the time you get through with all their nitpicking over all the little levels and details and everything, you get charged for everything. So if we broke it out the same way, this would be the pricing for the home study, the multi-day undergraduate, the graduate level course, all the trade plans, all the software, all the plugins, lifetime owners club, all right, live in the market trading rooms, and that's a monthly. Obviously, that could be thousands of dollars per year. Look at some competitors; they charge $5,000 a year for this. U.S. session 4 times a week, European session twice a week, 3 days of live training that we talked about, recorded, archived. Join us live, join us on the live stream, whatever. Trend Jumper, all the software, the Trade Assist, plus the brand new, nobody's ever seen a master's toolkit, and it could be worth multiples of this to you over time. And then the roadmap to the funded account. I've just put $500 on that. I don't even know what that could be worth to all of you. So total value, $18,976. No panic. You're going to save over 75% off of that. So not to worry about that. In addition, when we talk about the enrollment fee, understand that we have a 100% satisfaction guarantee. As long as you guys do the work, you're fully backed up by us being in this business for 17 years. All right, so we stand behind our guarantees. The only thing I'm going to ask is make the effort, right? Review the training, attend the live classes, watch the recordings, install the indicators, make some trades the way we train you. You'll never want to take advantage of the guarantee, because if you do, it doesn't work any longer, and that would be crazy, right, to give all of what you've learned back. That's our protection, but it's also your protection as well, because this way you know that when you enroll, you are going to succeed. And if you don't, and you put in the work and effort, just like we promised, and you don't, then you are completely backed up that way. So how much does it cost? I told you not to worry about $16,976. So if you're brand new to NetPicks and the Premier Trader University, it's a one-time, for life, own everything, $39.97, or just drop it down to a 4-pay, $9.99, 4 times, and you're finished. And everything we've discussed, and probably a bunch more I haven't been able to cover, is included. If you already own Trend Jumper, because you already have what we're covering on day one, though you may want to attend day one because it's a really great way to learn and master it, we'll take a full $1,000 off to basically reimburse you on the Trend Jumper and drop you down to $29.97, or do a 4-pay at $749. In addition, anybody who owns anything NetPicks and NetPicks Premier Trader University, you can use a discount code when you check out and use 500 off. It will drop down your one-time to $34.97 if you pay up front. Or if you're a Trend Jumper owner, get this, not only do you get the $1,000, I'll also give you the family discount anyway, and it'll drop you down to $24.97. That's if you pay in full. If you want to do the monthly payments, you see it there, 4 times $749, 4 times $999. You own it for life. There's no whole bunch of extra stuff. There's no paying for majors or graduate or more software or lifetime ongoing fees or licensing fees every year. I mean, this is your investment. I realize it's a real investment. I understand that. It's the type of thing that this is a true immersive experience. If you're ready to enroll, and I'm hoping, and I know some of you definitely are based upon the conversations we've had this week, you just need to go to netpicks.com/enroll. We have 40 spots. We're down. At this point, we've got 29 enrolled. We're down to 11 classes left, okay? We've sold out every single time. We are going to sell out again. We added multiple students this week. We've got, I think, 3 more of these webinars to go. I don't even know if we'll make it to the last webinar with seats. We don't want to have huge classes for this because we put many extra layers into the support and the coach's time and our time. Again, like I say, this is a true hand-holding experience, okay? If everything you've done up to this point has not worked trying to do it on your own, this is the experience you guys should really, truly be after. Let me mention something to you. There is a way to get the reimbursement on your tuition up to 100%. You've got to trade futures or you have to trade stock or options because there needs to be commission. But if there is and you go with the TradeStation platform, they're willing to rebate you 20% of their commissions, which are extremely reasonable to begin with, up to 100% of your tuition fee. So over time, since we've done this back in 2012, we've had people succeed with their trading and actually not pay a nickel over time for their university enrollment because TradeStation has paid them back. The reason TradeStation does this is because you guys end up being their best customers because you guys will last and you'll last forever for them. It's a hell of a lot better for them to acquire customers this way, fully trained and successful traders, than getting people basically off the street who aren't going to last more than a few months. All right. Plus, they'll treat you guys like gold because they just love PTU customers. Again, if you're ready to enroll, netpicks.com/enroll. And I do want to get to more questions in a moment, but I want to point this out. There is the hard way to become successful as a trader. And I say the success rate here is about 5%. Okay, and I've seen people do it. You buy dozens of indicators, you buy dozens of systems, you spend a ton of money. You do it all on your own, or almost all on your own with very little support. Most of the companies aren't there; they disappear. Once they're done delivering you your system, they're done with you. You backtest for hundreds or thousands of hours, or worse, you try to trade in real time immediately. And that's usually a disaster. Then you trade the unproven systems. You make a little, you lose a lot. You make a little, you lose a lot, and basically you end up wiping out your account or drawing down too much to where you need to repeat the process all over again. And unfortunately, eventually, most people, 95%, will quit frustrated. You'll have a bunch of losses. You'll have nothing left in your trading account. And some of you will be a little addicted to it. So you'll save up money in 6 months or a year, and you'll start this pretty cruel cycle all over again. And then maybe 5% of those will end up finally getting to the point of success. You can also do it a different way. And I think this is the way that we have presented to you today. And that's the PTU way. Acquire one core proven trading system. That's the Trend Jumper. Attend live in the market training to learn all the rules. Practice your trading in real time along with real time in the market trading rooms. You literally will be side by side with us. Start trading a small account. Compound your profits like we showed you today to add multiple contracts and or multiple markets. Build a part-time and then work up to a full-time income. Do it all fully supported and joining over 1,000 traders doing it around the world the PTU way to create a real sustainable trading business. I think it's obvious to me. I feel I'm biased, but the PTU way seems like a hell of a lot better way to get this going. So with that, I'm going to put up all of our contact information, and I'm going to ask Brian to come on the mic and cover any questions that we need to, or we'll start to look at some questions as well.
All right. Thanks, Mark. And it's been a very active group behind the scenes here. We've had all the coaches responding, but pretty much caught up at this point. There's just one thing that I always like to mention, a very common question, is what platforms are supported inside the university, and basically what platforms are supported with the strategies that we showed you today. The answer to that is very simple. TradeStation obviously is the platform we showed you and demoed today. NinjaTrader is another option, great option if you want to use different brokers, and so NinjaTrader. And then thirdly, MetaTrader is an option, but you got to keep in mind it is limited to Forex only. So, and I always like to point that out. Another question was from Gerald. He was asking about the automation and autopilot, to be trading on autopilot. We've talked a lot about automation today. And I do want to stress, yes, we have what we call Trade Assist, and it's available inside the university, but it's not autopilot, Gerald. So I just want to stress that. We always suggest you are in control in front of your screen, and but that is a part of the university and what we'll be training on. Other than that, Mark, pretty much anything that's open at this point can be answered. Yep.
So to answer your question, Grant, on additional P&L and things like that, I would watch some of the prior webinars. We focused more on each one on results depending upon what we were talking about, and we had all the way back to 2012. And reminder, those were all done in our real-time live training, and those are what Troy archives. You kind of saw a lot of it here today. Not on every market, of course, because it's impossible for us to archive and track every single market, but you get a pretty good feel based upon that, and also some of the prior webinars on some of the other performance that we've had with the Trend Jumper over time. Andy, you're asking about, a Trend Jumper owner webinar that we're doing, and that's where we're really going to introduce to the Trend Jumper owners more detail on day 3. Obviously, in this webinar, because we have a lot of new people and also some Trend Jumper owners, we didn't want to go into too much micro detail for people who haven't learned the Trend Jumper yet, but the idea behind Tuesday's webinar is we're going into a lot of detail for Trend Jumper owners of what this brand new Master's Toolkit is all about. It's pretty impressive, and so Troy's going to really just hold a really detailed webinar on that. So that's what that is in that case. Josh, great point. It's a lot to cover in the 3 days, and you're right. We're not asking anybody to be, a master's level trader at the end of 3 days, but you're going to have all the materials. You're going to have everything you need. When you leave the university, you're going to want to start on what you learned on day 1. Okay, and start to put that into place. But we're not done with you, by the way. You're going to be able to attend live in the market trainings 4 days a week in the U.S. session, 2 days a week in the European session, and see how it's done and work side by side with us, okay? That's not going to change, okay? That whole effort is going to be there. And then over time, as you get better and better and you grow your account, you'll be able to implement things that you've learned in day 2 and day 3. Remember, it's all archived for you, so don't feel like you need to, be perfect with it on day 4. You definitely don't. Joabra, is this a completely new version of Trend Jumper? Not on day 1, right? That's everything. If you already have Trend Jumper, that's what you have. But come day 2 and day 3, that's where everything new starts to come into play. That's why we have so many Trend Jumper owners upgrade into the university for what we showed you on the graduate and the master's level. Yeah, live European trade room is 2 days a week, and that's done by our coach James. He does that, and it's he focuses on markets, as you would imagine, that are good for those markets, whether it's the DAX, the FTSE, Forex, things at European business hours. Trade Assist is included. You get 90 days with the software, and then if you want to have it after that, there's a monthly. You'll know if you want to keep it. I didn't want to make the price too high on the university and force everybody to have that lifetime, because you don't need it. If you don't want to develop trade plans, if you want to use our plans and not go beyond that, if you don't ever want to do semi-automation, you may not need it. So I think 90 days is a great way to determine if that's something you want to own and own for life. But we'll train you on it. You'll definitely have it. You'll have it for 3 months. That's a great opportunity to determine that. John, is the master's level toolkit? No, it's not available for MT4. That's going to be available on TradeStation, NinjaTrader. There are some limitations if you're on MetaTrader 4. You can definitely do a lot of this, but it's really just going to be the Forex side of it. Eventually, I think you're going to want to move into Ninja or TradeStation. Those platforms can be from low to no charge, and it's really the best way to go ultimately if you want to be a professional level trader for income. Josh says, I understand. Yeah, the whole Canada thing with TradeStation, it's something you got to take up directly with them. They're not licensed in every province. However, you can consider something like NinjaTrader, which works with dozens of different brokers. So that may be a different or better option potentially for some people. And there are even ways to get NinjaTrader, the platform, for free. You many times can sometimes even get some data for free or very low cost. So I kind of find platforms and data and cost these days, there's so many good deals out there that it's just a nominal expense, if anything, on a monthly basis. Dave, you're asking if someone wants to be, sorry, I missed the question. After the April class, when is the next graduate program? At this point, April, May, June, July, I'm not 100% sure, but it's probably going to be no sooner than the summer, mid to late summer, based upon the schedule that we have upcoming. That would be the soonest. The last time we've done a PTU class was early Q2 last year, so it's almost a year. We were doing them every quarter, but they're such huge undertakings for us that we got away from it a little bit, and we've had people been, basically on us for the last 9 months, basically saying, when is the next class? We had a bunch of people enrolling, basically, and waiting for it. So we're going to try to do it a little bit more often than this last break we took, but you're still going to have to wait a few months. What is the time for the European trade room? I'm not 100% sure. If Brian knows or Troy, I'll let you guys answer that in the text there. I think it's around.
I think it's 3 8.
Go ahead, Brian.
Go ahead.
No, you go.
Take your guess, and then we'll see if you're right. No, it's 3 a.m. Eastern Standard Time, so you can convert that to GMT.
3 a.m. Eastern Standard Time. Did I get it right?
You got it right. You win the prize.
Awesome. Grant says, if someone wants to be successful and follows the course, are you basically guaranteed success? Well, I can never guarantee it, okay, because I'm not 100% sure everybody will follow it. But yes, I really truly believe that if you follow what we teach and you stick to it like religion or whatever works for you, that you can definitely be successful. The reason I can say that is we've had a number of people do exactly that. If you decide to veer from it, decide to reinvent the rules, then no. I mean, you can absolutely cannibalize your opportunity to be successful, but I just don't see any reason if you follow what we teach. The path is there. The path works. So, yes, I really, truly believe that. How much will be the, let's see, with Trend Jumper and KB? Well, Hector, we'll be talking more about that in the training. We'll have a full presentation on all that as well. Let's see. How does Trend Jumper? Yeah, I mean, Chet, you're naming a bunch of other products, and I don't know. I don't really compare it to anything else. I know what works and what works for us. We've been doing this for 17 years. We stand behind it. We know it works. The path is there. I couldn't even tell you how it would stand up to anything else. It kind of, in a way, sort of doesn't matter to me because this is what we all trade. This is what we're all involved in. And we definitely know it works. So hopefully that's the best thing I could tell you. And I would never talk down about a competitor or anything else. I just choose not to really do that type of direct comparison. Let's see. What time is the owner's webinar on Tuesday? I think it is noon Eastern, New York time. let's see, and we'll send out another reminder on that as well on Monday. Is trading options part of the funded program? The funded program is futures, and they're going to be adding Forex. So futures and adding Forex. Let's see, and the link, please. Oh, for the webinar, yeah, on Tuesday. I don't personally have it. If you're a Trend Jumper owner, it's on a different system. You should be getting email on it. So hopefully that's the case. I don't know, Brian, if it's something you can dig up and get to Paul there in Florida. I unfortunately just don't have it handy. Let's see. Alerts start about 7 a.m. GMT. Okay, that's from, I think, on the European hours. Thanks, John. Let's see. Should you set up an account with TradeStation before the class? You don't need to, Mike. It wouldn't hurt if you wanted to do that. It's not a necessity. Make sure you go through our contact at TradeStation, which will get you. Not because that guy pays us or we make money from TradeStation. I say this all the time. I make 0.00 off of TradeStation. That was our revenue in 2013 and 2014. The reason we recommend them and we recommend a specific team there is because they will treat you guys like gold. So why not be treated like gold? You're that valuable to them, trust me, and they'll throw everything they can at you. So not a bad idea to be set up if you are. If you're not, it's okay. Requirements to become a funded trader, Stuart, it's all about reaching certain statistics and objectives. And they've got, basically, the investors have a slate of numbers that you need to hit. And it's things like, it might surprise you, it's not as much on profit. It's drawdown, right? It's, average gains. It's circuit breakers during the day. And so our trade plans qualify for these requirements. If you can hit these requirements and it's tracked in real time, then really the sky's the limit on that. So that's the requirement. What happens is, as you know, most traders can never qualify for these type of parameters because they don't have systems or training that are good enough. But we've had people go through the PTU and go through this and actually fully qualify and become funded traders. So the path's already been laid out. We have successful people doing it, and we're actually going to have those people who have been successful come back in, actual students, and they're going to be the ones who are going to be training that during the university. So kind of cool. Recorded sessions on the European. I don't know. I'll ask Brian. Maybe talk to James about that if he can occasionally record one of the European sessions. No, JP, on the boot camp, that's basically everything you see on day 2. So if that's something you've been waiting for or interested in, then go ahead and enroll because you're looking at day 2 and day 3. Day 2 was all prior boot camp, and then day 3 is all brand new for Trend Jumper. So that's the new program for you. Kevin says, can you offer a market that you can be day traded in the early morning hours so someone could get started trading while they have a day job? So Kevin, without knowing the hours that you're in, I don't know, Troy, would you think possibly Euro-Yen on a day trade side? I mean, kind of if we're talking early, I would think the Dow E-mini and that type of thing, they start a little bit too late for somebody pre-work. What do you think?
Yeah, I mean, it depends on where you live. If you're on the West Coast like me, then, there's a ton of
CST.
Options.
Yeah, he's CST, so Chicago time.
Yeah, so I mean, again, well, the Euro-Yen is starting for us at 8:20 Eastern Standard Time. But I am coming up with brand new trade plans that begin earlier. So I think the options and the opportunities are there, but we just got to sleuth them out.
Yeah, and some of it is you have to have the ability to complete it. Like I've got some things that start 7 a.m. Central, but I'm not always guaranteed that I'll be done at 8 or 7:45. But like you said, Troy's looking at some things, being like what Will's thing has been, the minimalist trader, where it's a much smaller bracket of time. So it's quite possible. The other possibility for you is to consider swing trading instead, and swing trading on Forex. Then you don't need to worry about your time constraints and your time commitments. Grant, yes. Sorry, 1 second, Troy. The 3-day training is recorded. So if you can't attend the 3 days, April 1, 2, 3, if you can't attend all of it, we immediately record it, we archive it, we make it available. Attend what you can. I would recommend that. But if you can't attend all of it, it's okay. Troy, what were you going to say? I'm sorry.
Well, you made a real important point as far as when it finishes, because the market does what it does. We have no control over it. If you're in a winning trade, it's going. I mean, I'm finding some amazing results with 15-minute charts, for example, that start much earlier. But, the trade can go, and every bar takes 15 minutes. Those problems have to be figured out.
Hey, Mark, I want to interrupt a second.
Yeah.
Just put the link in for Trend Jumper members that want to attend the Tuesday webinar. It's in the chat, so feel free to click on that and sign up, and that way you'll get a reminder email prior to Tuesay's webinar.
Great. Thanks, Brian. If you're not a Trend Jumper owner, I'm not going to stop you from coming. It just might be a little bit, not a great use of your time because you're not going to understand all the core stuff. So just kind of putting that out there. But if you wanted to attend, you definitely can. We're just going to go into a lot of detail on the day 3 topics. Is there an upgrade charge for the new Trend Jumper version? Well, yes, John. I mean, I'm basically giving you a full refund on the payment. So we're dropping from $39.97 down to $24.97 because you're getting the $1,000 discount plus using the $500 off. So it's $1,500 discounted. So it's basically like your purchase plus even a little bit extra is fully reimbursed to get everything you're seeing here. So hopefully that makes sense. I think that is by far the fairest way for us to do it. You'll never really double pay with us is what ends up happening there. So all right, well, I think we're about at the end of the questions. I'll do one final call out if there's still something that's lingering or we skipped it somehow, we missed it. There's been a lot of questions. Feel free to type it in here again. Up on the screen, you should see some contact details. I realize that for some of you, you may want to talk or chat with somebody individually. Brian has actually put his personal email up here. He's happy to work with you, chat with you, call you on the phone, whatever the case may be, to talk about this in more detail as you make your decision. Don't wait too long to make your decision. Like I mentioned, we are going to fill the seats, and this isn't something that we do every month. So if this is something that you want to do, and I know it's a big decision, and I know it's an investment and a commitment, just don't ponder about it too long. It's best just to get started and get enrolled. So just kind of let you guys know that as well. Walter, as far as Forex pairs for day trading, what would you say, Troy, on that? What are going to be the best pairs for day trading on the Forex?
I mean, all the most active pairs, I've found that, there's a period of time, usually from 2 a.m. Eastern to about 5 a.m., give or take, where you have a lot of activity. And so the most active pairs, some of the yen pairs, I just completed a brand new trade plan, actually, that will be part of the training on day 3 that is designed for the European session. I think I'll have several more, actually, by the time we get to that day. But, it's basically you want to focus on where the action is.
Yeah, we always talk about don't force certain markets to work for you. Some traders come in with these preconceived notions that they have to trade the Euro-US or they have to trade the S&P Mini, and that's all there's at. That's all the opportunity there is. And it's actually many times an easier, better, faster path to success not trading some of the most obvious markets. So we're never stubborn. Like Troy says, you got to let the market do what it's going to do. I'm going to be where the market's willing to give me profits. And it's not going to be where I'm just insisting I need to trade because, I don't know, I've read somewhere that everybody else is trading the same thing. Grant, yeah, you can definitely do this part-time because this is not 8 hours a day trading ever. I would say the average time that I spend day trading is, probably 90 minutes or less per day, and on the swing trading, 15 minutes or less per day. I've never put in, well, maybe I have in the past stupidly, but I would never put in 6, 7, 8 hours in a row of trading. Completely unnecessary. So just don't do that. It'll be a bad, bad move for you. All right, let's let everybody get on with their weekends. Thanks so much to Will and to Brian and to Troy. Congratulations for those of you who are enrolled or already enrolled. I know some of you keep coming to the webinars to learn the educational stuff at the beginning, which is great as well. Awesome questions. We do appreciate that. And again, like I said, if you're still thinking about it, contact us. Talk to us, email us, whatever the case may be, so we can kind of get all your questions answered. So with that, I'm going to let you all go. One final thing. We do have 3 more webinars coming up. So just go to premiertraderuniversity.com/webinars, and we've got about 3 more, I think. 3 more. 2 more next week, and 1 the following week before we actually start the university. And got some really good topics, including Forex trading in 15 minutes per day. That's always a very popular one. So to really get to go into a lot of detail on what you can do on Forex on the swing trading side of the equation. So that'll be a good one as well. All right, everybody, we'll see you there, and talk soon.